And the first thing I need to do is to try and work out how to get the next slide. There we go. Okay, so the Low Pay Commission. The Low Pay Commission was set up in 1997 and began operations in 1999. It's basically, its remit was basically to evaluate the impact of and to make recommendations on a national minimum wage, which, if you cast your mind back, those of you who were around and active at the end of the last millennium, it was quite a hot topic, quite a controversial topic. It's independent of government and it uses a social partnership model of operation, which is to say that there are 9 commissioners, but there's a balance. 3 commissioners are independents, 2 of whom are academics, leading academics in labour market economics, and 1 of whom is the chair. 3 commissioners have employer experience and 3 have union or worker experience. I'm one of the 3 who has a union or worker experience. We're appointed as individuals through an advertised public appointments process. All commissioners have an equal vote. And to date, we have always agreed recommendations on the basis of consensus. And I think that has been one of the great strengths, enduring strengths of the Low Pay Commission, that because you have this social partnership model where everyone makes a really genuine and concerted effort to understand each other's positions, we work very hard and we have been historically successful at finding a consensus, which we can then recommend to government, who then in turn, we've done the heavy lifting for them. In essence, they see there as a consensus, they're much more likely to implement our recommendations, which is what they almost always have done. And then we have a secretariat that provides analysis and policy support. And I'm pleased that Jack Darby and Joseph Wilkinson from the secretariat are with us here today, and who will dig me out of any holes I inadvertently fall into. Okay, the accommodation offset, which of course is the thing that we're particularly concerned about in discussing today, comes into play when a worker lives in accommodation provided by their employer, and the employer then charges them for that accommodation. And the offset sets a limit on what an employer can charge a minimum wage worker for that accommodation. In the current rate, January, February, March 2023, a worker earning the national living wage can only be charged £8.70 per day or £60.90 a week for the accommodation that's provided by their employer. And the offset includes essential utilities. So, for example, if an employer was deducting the accommodation offset from a national living wage or a national minimum wage worker, and then charging again for water or electricity, or controversially in some cases, internet use, then that may take the total deductions cumulatively may take that employee below the level of the national minimum wage or the national living wage, which would be something that's not allowed in law, and the HMC, I'm sure, would be interested in that. So that's the dynamics. We review the offset every year, as we do all the rates for the national minimum wage. What we do for the national minimum wage rates and for the national living wage is we have a very clear brief. For the national minimum wage, we are charged with raising the rates as generously as we can without compromising employment, without negative employment impacts. For the national living wage, that's currently the rate paid to all workers aged 23 and over, which is due to go down to 21 in future years. For the national living wage, this is guided by a target that the government has set and has instilled as their policy, which is that all workers aged over 21 should be on a rate of pay that equates to 2/3 of the median earnings as of April 2024. So that's the end point, and our task is to chart a path towards that, again, which doesn't unduly jeopardize employment prospects. But the offset is different. Unhelpfully for this discussion, neither the Low Pay Commission nor the government has set out a clear principle to apply in determining what the level of the offset should be. And evidence is quite thin on the ground, which is why webinars like today are so very useful for us, because there are relatively few evidence sources which let us look at what an appropriate rate would be, what the impact of past increases has been. So what we found in the last year, and this is consistent with what we found in previous years, is that the settings where low-paid workers are accommodated by by employers, the nature and quality of that accommodation, and what drives employers' decisions are all very live and fluid issues. For example, employers told us last year, as they had done in previous years, about the importance of high quality accommodation to attract and retain workers. Now, that's particularly the case when we're dealing with migrant or seasonal workers in the agricultural and horticultural sectors, but it's not unique to those sectors. And employers took great pride almost in describing to us the style and the nature of the accommodation that they were providing for their workers. You talk to the workers and you get a different picture, sometimes about the self-same accommodation, where what is attractive to the employer is nevertheless cramped, overcrowded, not necessarily particularly clean from the workers' point of view, and the workers say they feel powerless to raise these issues and complain. Now, part of the equation is that the level of the offset does not and was never intended to cover the employer's costs fully. It's always a contribution. So the dynamic that the Low Pay Commission is looking at is that on the one hand, it's right that an employer has the ability to recoup some of the income of the accommodation they provide for their workers. But on the other hand, if no accommodation was provided, they wouldn't have any workers because of the nature of their employment. So there's a balance there that needs to be kept. So we were conscious over the past 12 months, particularly, of comments from employers providing accommodation that they've been hit by particularly sharp increases in costs, particularly fuel costs, which of course have to be kept within the umbrella of the offset. And they were saying they understood, employers were telling us that they understood that the accommodation offset wasn't meant to cover all the costs, but couldn't there be some flexibility or recognition of the particular circumstances? And as the Low Pay Commission, we are not unsympathetic to that, but we believe that there are two particular factors that need to come into play before we'll feel comfortable about raising the offset faster than we have done historically. The first is about quality standards. Too much variation. There are some that are good. There are some that are awful. There are very few where improvement, you can't see that improvement is a justifiable claim by the people who live in it. So at the moment, workers are vulnerable to finding themselves in poor quality accommodation. And we know that there is active consideration being given by some governments, particularly the Department for Levelling Up, about revisiting accommodation standards. And we encourage the government to press ahead with that work, and then we can piggyback onto it and provide advice and recommendations to employers on the back of it. And then second, we have a problem about, especially in the agricultural sector, of what happens if you don't get regular weekly pay or regular monthly pay. What if your pay is dependent on the weather and there's a washout and you can't do any work? Then you face the situation where you may be charged the full weekly offset, but actually your income has been very much depressed because you only get paid when you work. So we need some arrangement around that. And until those concerns and conditions have been met, we've decided we're not going to make a recommendation to significantly increase the value of the offset. As it is, in April, the offset will rise by 40 pence to £9.10 per day. And that increase, which is about 4.5%, slightly more than 4.5%, is in line with the projected growth in average earnings that applied at the time we were making our recommendations. And then there's one final recommendation that we made to government, which government have accepted in principle, which is that seafarers particularly should be exempt from the accommodation offset while on board ship. And I think that illustration about seafarers sort of encapsulates the concern or the balance that we have to find. On the one hand, if accommodation is provided, it's right that those enjoying the accommodation pay something for it. On the other hand, if there's no accommodation, there's no work. Seafarers have absolutely no choice whatsoever while they're aboard ship other than to use the employer's accommodation. So the questions that we're considering this year is that we're very keen to try and understand the effect of recent increase in the offset on employers' decisions about the quantity and the quality provided. Are there particular issues created by the current arrangements for the offset? what would be the impact of a suitable enforcement regime? Is it too much of an ask? Is it too much of a stretch, or is there something that really could be put in place? And what about the suggestion of a minimum hours requirement? How, in effect, would that work and impact on employers? So these are the sort of things that are in our minds going forward into our current year's work. And I very much look forward to the views of those on this call to those points. And I would just say at this stage, in case I forget later on, that if there are questions that come to your mind, any of your minds, that we don't have a chance to deal with today, Joseph and Jack and the team in the Secretariat would be very, very happy to try and respond to those if you just email them in to the Low Pay Commission following this call. So that's it. Thank you.
Thank you, Simon. Does anyone have any questions for Simon at this point?
I speak to employers, some of you quite a lot, no doubt. And one of the biggest concerns from the employers, and why I was keen to invite the LPC to come along, which incidentally we have been in touch with through Joe and predecessors in the departments, and found the LPC really to be an understanding friend of the equestrian community, which I think I must say I appreciate your interest. And I don't think a lot of people in the equestrian industry quite understand what the LPC does. So I just think that is something for you to take back, because we very much are, as an industry, a low payer in general. Okay, we certainly fit into the low pay level. Now, the reason that we wanted accommodation offset, and I do appreciate that won't affect everybody on this call, so I'm conscious that we move on to the next section quickly, but is because one of the complaints we often hear, and I suspect there might be the odd head nod as I say this, is that I understand it's a contribution, but £60 for a 2-bed beautiful Cotswold flat is quite a bemusing figure. Okay, so the equestrian community, who provide perhaps, I don't know, but perhaps this slightly more unique style of accommodation in comparison to fruit pickers, pub workers and seafarers, it's very difficult for the equestrian employer to understand how the figure can be set at £60. I think that would be a fair. So the question is to you, how do we as a community, as an industry, get our voice to be heard louder on this subject matter?
Right, well, I think the most effective way would be to lobby the government's Department of Levelling Up to press ahead, accelerate their work on the standards framework, because that is a major constraint on us being able to, in turn, accelerate or augment the rate at which the offset allowance raises. From what you've described, Lucy, it seems that very, very few of the, very, very little of the accommodation that the EEA's members house their employees in, whether those employees are on the national living wage and national minimum wage, would fail the quality threshold. But I think that is another way in which the EEA is probably, if not unique, then kind of upper decile or upper quartile in terms of its response on these issues.
Please, you're on mute.
Sorry, I was muted. Thank you. We'll pick that up externally for all of our members that are on the call, and we'll continue that conversation forward, because I know it is very significant for many employers. They can't quite get that piece. So, Kia, over to you. Keep moving forward.
Zakina is up next. So over to you, Zakina. Thank you for joining us today.
Well, thank you very much for having us here today. My name is Zakina Oxley, and I am part of the National Minimum Wage Promoting Compliance team. As you all, I'm sure, are aware, HMRC is the enforcement body who enforce national minimum wage issues. So what I'm going to talk to you about today is some of the common issues in your industry, unpaid working time being a big one. We'll talk about how pay periods can affect that. entitlement to minimum wage, deductions and payments. And then I'm going to finish up with just an example of the cost of getting things wrong. So unpaid working time is arguably one of the most common reasons for underpayment of minimum wage to workers. Basically, any additional working time that's unpaid will directly affect minimum wage calculations, and it can lead to workers being underpaid. Now, the common errors that we see are in relation to, first of all, travelling time. So travelling in connection with a worker's job is working time, and it should be included in pay calculations accordingly. So that might include things like travelling to competitions or training. The one thing that's excluded from that is our general commute that we all have. So that travel from your home to the first place of work and your travel from that place of work back to home. Another one is training time. Any time that's spent on training counts as working time and again needs to be paid as such. Now, this is any training that is required to perform your job. So that could be things like getting first aid certification, anything like that that you're required to do as part of your employment. And then we have the unpaid working time. So we've got that there as bookend time. So that is your, can you come in 10 minutes early because you need to get ready to be set up? Or more often than not, it's staying 10, 15, sometimes 20 minutes late after your shift is supposed to have finished. So that might be staying behind to wait for someone else to finish up. If you're required to be there, you should be paid as such. And then downtime or waiting time, as we call it. So that's when your workers are spending their time waiting at their employer's disposal. So that might be on standby near the workplace. They're not working because it might be the horse's day off, or they might be a lorry breakdown, but they're kept at the workplace, or they're just waiting to receive a delivery or anything like that. These are just some examples, obviously, of common unpaid working time. You just need to bear in mind, if you require for your workers to be at a place of work, if you require them to be anywhere doing anything, then it's highly likely that that's going to be considered to be working time for national minimum wage purposes, and it would need to be paid as such. Now, I do understand that it's common in the industry where these, let's call it unpaid overtime, happens, that you'd offer the time back, so time off in lieu. And that in itself can bring about other issues. So the term time off in lieu, or toil, as we call it, is the term that we use to describe that arrangement where, as an employer, you give your workers time off instead of payment for the hours that they've worked. Now, toil isn't a term, it's not a concept that's recognised in NMW legislation. And this can cause a really big problem for some employers. And as an employer, you kind of really only have two options for dealing with this. So the first option, which is, I would say, probably the easiest one to help you to not fall foul of this risk, is to pay for all hours worked in the pay reference period when those hours are worked. Or the second option is to pay those hours in the next pay period. Now, this second option isn't one that I would particularly recommend, because it's very easy to fall into a cycle of behaviour where you're essentially just chasing your tail to keep up with all those extra hours that are worked. So as I said, the best option that I can recommend is paying for each hour worked in each pay period. And that's exactly what's stipulated in NMW legislation. So the legislation, section 1 of the National Minimum Wage Act, stipulates that the person who qualifies for the national minimum wage shall be remunerated by their employer in respect of their work in any pay reference period at a rate which is not less than the national minimum wage. So just to clarify, pay reference period is usually the period for which a worker is paid. And it's what we use in minimum wage enforcement as the basis for calculating whether the minimum wage has been paid or not. So this period can be weekly, 2 weekly, 4 weekly, or monthly, but it can never be longer than 1 calendar month. So, just to give you an example here, if you pay your workers weekly, and let's just, we've got a furry friend joining us. If you're paying your workers weekly and your worker works 10 hours of unpaid overtime, and we'll say that first week that they do it in runs from the 1st to the 7th of April. Now, your choice here is to either pay them for those 10 hours in that week commencing the 1st to the 7th of April, but the latest that you need to pay that overtime back to them is going to be in the following week, so the week running from the 8th to the 14th of April. So you either have to give them the pay for those 10 hours unpaid overtime by the end of that week, or whenever you pay them for that period, or you need to give them the time back for that time. Now, the same concept goes if you're paying 2 weekly, monthly, but obviously that time period, the longer your pay reference period is, the longer time period you have to correct it. So, you know, think about it realistically. If they're working that extra time in the week and you pay them every week, how likely is it that you're going to be able to give them those 10 hours back? Does the likelihood increase if it's 10 hours in a month? Do you have more wriggle room to try and put that right the following month? Again, another common issue in minimum wage is actually the entitlement to minimum wage. That is one of the key things that happens, is treating individuals as self-employed when actually they're a worker and entitled to be paid the minimum wage. And maybe labeling your individuals that you engage using different names such as interns, working pupils, volunteers, whatever it might be. So if we come in and do an NMW check, the very first thing that we're going to look at is the status of workers. And what I mean by that is the individual a worker, or are they genuinely self-employed? So almost all people that we would determine as workers are going to have that entitlement to the minimum wage. But if they are genuinely self-employed, running a business in their own account, then they're not entitled to minimum wage. And where we see employers struggle is actually correctly ascertaining that fact. So someone who's a worker are generally going to have a contract or another arrangement that entitles them to a reward for their services. So remember, a contract doesn't have to be written. It can be written, it can be verbal, it can be expressed, or it can be implied for minimum wage purposes. The reward they receive would need to be monetary or a benefit in kind, not simply the reimbursement of any expenses. And we would say that if there is a promise of a contract or future work, that might be considered as the formation of a contract. If you're a worker you have to turn up for work even if you don't want to. If you were genuinely self-employed, you would have that level of control whether you want to accept work or not. As an employer, you are under an obligation to provide work for that worker. If they're genuinely self-employed, that sort of obligation wouldn't exist. A genuinely self-employed person should be able to send in a substitute on their behalf. They don't have to perform the services personally for you. And just to bear in mind that just because someone is registered as self-employed and takes care of their own tax and national insurance obligations, it doesn't mean that they are self-employed for national minimum wage purposes. Okay. When you come to interns or your working pupils, not terms that exist under national minimum wage legislation. It doesn't matter what you call someone. It's always looking at what is happening in practice. What's the arrangement? What's the agreement between you as the employer and that individual that can make them a worker for minimum wage purposes? Minimum wage legislation is protective legislation. Workers cannot opt out of their right to it. So it doesn't matter if they've agreed and they've said, no, it's okay, I'm going to come in and I'm going to get this experience. You don't have to pay me minimum wage. It doesn't matter. The only difference being if it's to do with a higher education course or something along those lines. There are different arrangements in place for voluntary workers. So if they work for a voluntary organisation or associated fundraising body or a statutory body, they are deemed as workers, but it's all about whether they're entitled to minimum wage or not. The only people not entitled to minimum wage would be genuine volunteers. Now, to be classed as a volunteer for minimum wage purposes, certain things need to apply, i.e. that individual gives up their time freely. There is no sort of restriction on them whether they turn up or they don't. There's no sanctions on them if they don't turn up. And they're not entitled to any other sort of reward, or they have no expectation of a reward other than perhaps the reimbursement of genuinely incurred expenses. So that's, in a nutshell, entitlement. Another common error is deductions and payments. So these are deductions or payments that are connected with the job. So for example, having to purchase safety clothing, equipment, uniform, tools, basically anything else that is connected with the employment. And if these are deductions or payments and they're deemed as being for the employer's own use and benefit, they're going to reduce pay for minimum wage purposes. Now, people often ask, well, what does that mean? Employer's own use and benefit. And it boils down to control. If you make a deduction or you take a payment from your worker and that amount remains in your control, i.e. you can use that amount of money or that bit of revenue to do with or to spend exactly how you wish, it doesn't matter whether you do or not, the fact that you have the right to use that money will deem it as being for the employer's own use and benefit. Okay, doesn't matter if you make a profit or a loss from this. So you might provide transport and only charge a marginal fee. If you make it as a deduction, or if it covers your liability, then it's going to reduce pay for minimum wage purposes. The only difference is where a worker might pay you for goods and services. So for example, an example I'm going to use later is for livery. If you take that amount by way of a deduction, it will always reduce pay. If you take it as a payment outside of the payroll process, i.e. after that worker's received their pay, then that payment, if that worker enters into that arrangement freely and you place no obligation on them to make use of that good or service, then as a payment, that wouldn't reduce pay. So just to finish up, I'm just going to put this into a sort of simple example of actually what the cost is of falling foul of this national minimum wage legislation. So let's say in our example, you've got worker A, they are age 24, they're entitled to the current national living wage rate of £9.50 per hour. They're contracted to work 30 hours per week, which is takes their wages to £285 per week, 30 times £9.50. But each week they're doing unpaid overtime of an additional 5 hours, which if were paid would be £47.50 due to them that week. That's 5 hours times £9.50. But on top of that, you deduct £60 for livery. So the pay they actually receive, cash in bank, is £285 for their 30 hours per week. But actually they should also be paid that £47.50, and they haven't received it. But because of that deduction for the livery, it actually reduces that £285 they receive by a further £60. So when we come along and we're calculating what have they been paid for national minimum wage purposes, we'll use that £225 figure, which is the £285 they've received, less the reduction for the amount of livery, which actually takes them, based on the hours that they've actually worked in that pay period, down to an hourly rate of £6.43 for minimum wage purposes, which just in that week alone gives you an underpayment of £107.50. So as I say, that's 1 week. Let's look at what that means. After 2 weeks, the cumulative underpayment, they're owed £215. After 4 weeks, it's up to £430. After 6 months, £2,795, and after a year, £5,590. One worker. So let's say you've got 5 workers in your yard with the same circumstances. After 2 weeks, those are the figures, 4 weeks, 6 months, and so on. So you could be looking in 1 year at having underpaid workers by £27,950. And that's just what's owed to the workers. If you are subject to a national minimum wage check, and we're finding this sort of circumstance, there's also a penalty that's payable to HMRC of 200% of any underpayment found, which is a whopping figure of £55,900. It's eye-watering. The one thing I will also caution on is that national minimum wage checks can go back up to a period of 6 years. And as well as the financial sanctions, you may also be named under the naming scheme where your details are publicly given in a press release. So this is a very, very simplified example. It doesn't take into account things like rate changes that happen every year or any other risks other than a deduction. You know, we could have all sorts of things like accommodation offset coming into play here. So, you know, it's a bit of a cautionary tale, and the question that I'm going to leave you with here is whether you can afford to ignore things in the hope that actually in coming months they might work less than what they're actually working. Okay, so that's it from me. In the time given, unfortunately, I couldn't go into too much detail, but I'm going to pass you back to Vicky now, and I think we're going to do some Q&A.
Thank you, Sakina. That was great. Thank you so much. We actually had a couple of questions come in to the chat whilst you were presenting, but I didn't want to interrupt you as you
That's fine.
as you're going. So I'll just read them out to you now, if that's okay.
Sure.
So the first one was, if someone works a bank holiday and is paid a higher rate for working the bank holiday, do you have to give them a day off in lieu, or do they forfeit this holiday as they have chosen to work at the higher rate of pay?
If they, well, this all comes into premium rates, and one of the things that I wasn't able to cover with you is the nuances around the type of work that's being performed. And when I say type of work, I don't mean the duties being performed. It's the type of work that they would be classed as performing for national minimum wage purposes. Now, if you're performing time work, which is probably the easiest one to describe, and that's where somebody has an hourly rate and you pay them that rate for the hours, each hour that they work. If you pay them higher for working a bank holiday, we would come along, we only look at the base rate for minimum wage purposes. So we would exclude any premium amount that you pay them for those hours. And that amount just gets excluded. It doesn't get carried over. It doesn't get offset anywhere else. The working time is a different matter, because we don't, certainly for someone who's performing time work, any time that is not spent working, even if it's paid time, is excluded from the calculations, as is the pay for any non-working time.
Okay, thank you. Victoria, I don't know if you want to add anything to that and then follow up with the other question that you had afterwards. That might make sense.
Yeah, okay, I will do that. The thing about working, excuse me, I've lost my voice, so you'll have to put up with me croaking at you a bit. The situation with working time, Sakina is absolutely right. But if you look at Regulation 13, capital A of the working time regulations, you will see that the public holidays have now been included into the extra bit of the obligatory holidays that must be offered to staff. So if they're paid extra for working on a public holiday, then if the employer wants to pay extra for them working on their day, that's fine, but they still qualify for that day as part of their normal holiday entitlement. And it's probably just easier to think of it as that you have a set number of days, or 4.8 weeks, that are required as paid holiday. And provided that that is awarded to the employee, then how you pay for particular types of days is a matter between the employer and the employee, as long as it complies with the national minimum wage regulations. And I think that's probably the simplest way to look at it. The question I had for you, Sakina, was you've talked about making deductions from pay and how that affects national minimum wage. But I am right, am I not, in saying that once you've got to the position of having a net pay amount, that is with all stat deductions made, you have a net pay amount, it is then acceptable to make a deduction from that net pay amount. And I'm talking here about a regular Section 13 Employment Rights Act permission, where the employee has given permission, say for a livery charge to be taken from the net pay amount, or for, well, let's say just livery charge, that will not have an effect on the national minimum wage, because that has then been satisfied, because it's being taken from the net amount rather than from the gross, the gross amount.
So different legislation.
Mm-hmm.
First of all we care about within national minimum wage, there is no concept of non-allowable deductions or illegal deductions or anything like that. Okay. What we come in and we look at, and we will always look at gross pay for these calculations, is what is the effect of those deductions on national minimum wage pay. So if they're making a deduction for livery and it doesn't reduce that worker's pay below national minimum wage, we don't have a problem.
Well, that's what I'm saying, but the fact is, you have a national minimum wage, you have, say, the accommodation offset, any overtime and that arrives at a net pay, and then it's a tax and NI and all that sort of malarkey, and it arrives at a figure that complies with the national minimum wage. There is no prohibition then on an employer, with the permission of the employee, written permission, as I said, section 13 ERA, then deducting livery fees from it because it doesn't affect the national minimum wage.
I can't possibly comment on permissions and stuff like that because it isn't legislation that I deal with. As I say, all we would look at is the effect of those deductions or payments from that worker's pay before they receive it. Now, things like tax, national insurance, the statutory deductions, they don't have the same effect on pay as the ones that we've discussed. So in theory, I hear what you're saying, but I can't comment with a yes or a no on that. As long as the worker's pay isn't falling below national minimum wage, that's what me and my team are looking to find.
Well,
Thanks,
I think we'll have to leave it there. I'm speaking as a barrister, and how do you explain, you know, sort of, you have pension sacrifice schemes, childcare voucher schemes, all of those things deducted from people's salaries as a matter of routine with that employer's permission. And they don't act to even affect, they don't touch on the national minimum wage.
Well, this is part of my role. This is what we go out and say, and I can talk to you about salary sacrifice schemes and things like that. And the short answer in that is that even with the worker's permission, an employer needs to have a mechanism in place to ensure that that worker's pay, once that salary sacrifice has been made, does not fall below minimum wage.
Yes, I think salary sacrifice was a bad example to use. Anyway, okay, thank you for that. I think
Thank you.
That was most helpful. Thank you.
Victoria, I did have a question come in actually that if you wouldn't mind just asking, answering in the next minute or two, that would be great. Just before I ask it, I should just probably introduce you. Victoria is our employment law barrister that supports us at the EEA, and it's probably Victoria that you will get through to if you use our legal helpline. So I just wanted to say a bit about who Victoria was there. So welcome, Victoria, and thank you for joining us today. I did have this question, which I think will be quite a common thought probably across the industry, so of use to answer it. It's with the new increase to the national minimum wage, are we able to reduce an employee's hours so that the increase has less of an impact?
Okay, all right. There's a couple of stages that we have to go through. You're saying about an employee, so there will be a contract, and if there isn't, they're in trouble anyway. So it all depends on what is set in the contract. If the contract makes allowance for hours to be changed, then, well, I think it's a relatively high risk step to take. But if the contract allows for that, and it would have to specifically, sorry, that's the Tesco stores case, isn't it? They'd have to specifically allow for that, because it's a fundamental part of the contract, the hours. There would have to be specific permission within the contract to allow it. The contract doesn't, and I presume that that is going to be the more common state of affairs. Then the answer, the simple answer is no. Contracts cannot be changed unilaterally. You know, the rule of equity says there's no variation without consideration. That means if you vary a contract, you've got to pay for it. You've got to compensate for it. So while it's understandable that an employer would want to keep their costs level or even by reducing hours. The fact is that if they actually reduce their hours, they are in effect reducing the pay of the employee, because the whole point of the national minimum wage is that it is supposed to at least mirror the general financial status of the country. And so by reducing hours, they're paying them the same, but in fact it is an effective reduction. And so for that reason, if the employer wishes to do that, they should consult with the employees, see whether they are prepared to accept that, and possibly be prepared to make a one-off payment in compensation. It may not be very much, but that's the way it would work within private industry. And I don't see any reason why the horse industry should be any different.
Thank you, Victoria, that's great. Just conscious of time, we did have a few other questions that have come in, but what I'll do is I'll put that on a Q&A document and make sure that's sent round to everybody. But just wanted to give people that are here an opportunity to ask any questions that you might have now at this point. So open the floor to everyone. No? Okay, no questions for anybody. Okay, what I'll do then, I'll just go to one further question that we had in prior to today, and then we'll end things there. So one question that we do get asked quite often, I don't know, Laura or Ashley, our accountant and payroll guests today, might be able to help us with this one. But we quite often get asked, how do I know if a benefit I offer is taxable? We get quite a few questions about taxable and non-taxable benefits. So if someone could help with that, that would be great.
Hi everyone. I think that there's a really sort of straightforward place you can go to answer that question, and that is actually through the HMRC.gov.uk website, which has a really comprehensive list, A to Z list of everything that could possibly be considered a benefit, and also a list of benefits that are tax-free as well. So you can pretty much find anything you can think of on there, and it's a really easy resource to check. And obviously, you know, you're kind of going straight to the horse's mouth, as it were. So that's I can share a link to that in the chat, or send it to you, Vicky, if people would like.
You can send that to me, and I'll send it round in the follow-up comms.
Yeah, it's good that there's a little explanation of kind of what kind of things to look out for, and then just a really good A to Z list, so you can kind of you know, look up anything that you think might possibly, you know, if you're concerned about it. It's a really easy place to look it up, and then obviously it gives you an idea of how to work it out as well, kind of how much the benefit would be that you would have to tax them on, so you can kind of think about whether you want to go ahead with that or not. So I would definitely, you know, point people in that direction initially.
Okay, that's great. Yes, if you wouldn't mind sending me a link to that resource, and then I'll share it round, that would be brilliant. Thanks, Laura.
Okay.
We have had a couple of questions in the chat, which we may have to follow up afterwards, if that's okay. So I'll make sure I take a note of those. I'll just do that now. Thank you so much for everyone attending today.
Sorry to interrupt you, Vicky. There are a couple of questions that I think are really worthwhile whilst we've got Sakina here, and if anyone needs to leave, then we really understand. But I think there's one for you, Simon, which I think was quite relevant. We expected to have another sharp increase in the national living wage, national minimum wage for 2024, because this is the biggest increase that has been seen for a long time. What's your gut feeling? And we're not going to hold you to it, don't worry. We won't but you won't be in the pages of Horse and Hound. But what's your gut feeling? Is it going to slow down a little going forwards? Because it's very concerning for our equestrian proprietors.
I'm quite happy for this to be on the record and published in Horse and Hound or anywhere else that you like. The Secretariat provide an ongoing monitoring service in terms of the movement of wages and inflation, of course. As commissioners, we meet regularly, more or less monthly, to make sure that we are on top of the latest statistical information. Because the national living wage, as a point of government policy, the objective is for it to reach 2/3 of median earnings for all those aged 21 and over by April 2024. So you can see there are very few steps left, aren't there, between now where we are and April 2024. And we decided, taking into account the state of the economy and particularly the movement in pay settlements, that it would be more appropriate to front load the recommendations for how we get from where we were in 2022 to where we need to be in 2024, rather than to backload it. So it put another way, that means that the higher increases that you've seen and that will come in on the 1st of April this year will not be repeated in 2024, and we are expecting that figure in April 2024 to be around £11.07, perhaps plus or minus a few pence either way. You'll appreciate it's a movable feast. The recommendation and or the estimate of where that 2/3 of median earnings for all those aged 21 and over is going to be will fluctuate and vary according to economic circumstances. But the straightforward and very concise answer, Lucy, is no. You won't see a similar sized increase next year. That's my view.
Okay. So one further question is that you thank you. One further question is, you mentioned, and I'm aware of this, that the national living wage will be dropping to 21 years old. Is that a 2024 thing? Because what that will do, look, I'm looking to the right because that's where my figures are. What that will do, if I'm right in saying, is take our 21-year-old workforce from £10.18 up to £11.7-ish.
Yeah, the people who inevitably will get the biggest increase of all are the people who are paid in the 21 to 22-year-old bracket at the moment, who will be very beneficially affected or more beneficially affected by the lowering of the eligibility age to 21 than any other group. So yes, Lucy, I'm afraid you're right on that one.
And one other final little calculation, because this is the thing we do for everybody listening, is if we were to take the 18 to 20-year-old group, who are currently on new rates, going to be on £7.49, when that 20-year-old turns 21, am I right in saying they're going from, let's just say, around about maybe £8.50 to £11.7?
I'm just playing this forward in my mind. Yes, necessarily, when someone emerges from the 18 to 20-year-old bracket into what is now the adult rate of the national living wage, or will be in April 2024, that will be a significant step up. But you could argue that it's not necessarily any different from someone who is 22 at the moment turning 23.
Yeah, no, we've clocked that, but it is actually quite a big step up for the employer. And I don't know what other people think, but that is, I think, going to be quite a challenge in our industry, because the peak of our staffing model tends to be around sort of 18 to 22. Would that be fair? Anybody else want to kind of come in on that? Claire King, maybe you have a thought on that. Obviously, we know that we're not influential on this one, but I'm just pointing out the impact that this will have on our sector.
Well, that's one of the reasons why we're very keen to make sure that we share our intelligence about the labour market and the way where it's moving to anyone who's interested. And Joseph, I think, has put a link in the chat to where the latest projections are, because we know that for business, one of the most important things is to have visibility of the likely changes that will take place in order that they can be considered and accommodated or whatever.
Claire, do you have any thoughts on that?
Am I on speaker? Is it working?
Yeah.
Okay.
Yeah, we can hear you.
Sorry. Yes, it would, because from we would almost categorize as our experienced staff those that are over 22, 23, 20, you know, like our more experienced, if you want, traveling grooms or yard grooms. So it's almost aligning your junior staff, paying them if people aren't elevated onto a higher higher hourly rate because they are the traveling groom or the yard manager. If I'm just going to ignore that fact, you're leveling them up fairly quickly. And at the moment it sits quite nicely that the younger staff that are less experienced working on the yard get a lower hourly rate than those that have been working on a yard for a few more years. So it almost is pushing the employers, in my industry anyway, potentially, that they do then need to pay those that are the 22, 23-year-olds, 24 above more, because otherwise they're earning the same money as somebody who's only come into maybe a job for, you know, the first time from college or something. I think that's my interpretation of it.
Claire, what you're saying is understood by the Low Pay Commission. We see a pressure on differentials in many industrial sectors. So the EEA is not alone in flagging to us that that's an issue. Yeah. Especially
with ours, where those more experienced staff might actually then be doing more hours as well. So you know, if you're gonna for some of my clients, it would be really tight to pay those older staff more hourly rate, because then you've got to pay them more overtime because they do inadvertently do more hours because they've got more responsibility, or giving them an awful lot of time off.
Yeah. I mean, of course, I would imagine the aspiration of all EEA members is wherever possible to not pay at the wage floor, but some distance, however little above it. In which case, the nature of the debate changes somewhat. But I recognise that's not. Yeah, I recognise that given the realities of the situation, that's not always possible for all of your members.
There was also a question for you, Sakina, but this might be one. I know that we had a conversation regarding it. And this question is from Claire King again. So giving toil has to be in the pay reference period and not rolling. Now, this one might be one I know that Vicky, you might work with Sakina to get an answer for everyone on this, because I know it can be quite long-winded, this answer.
Again, it boils down to the type of work that is being performed. Now, if you want to have rolling toil, then having your workers performing salaried hours work for minimum wage purposes is the only way that really will add any benefit to you as an industry, because the rules change slightly. For most of the other types of work, it is on that PRP basis, unless you are correcting it that very next PRP. The only time when you get to sort of average hours out across the year is if you are treating your workers as performing salaried hours work, which brings with it a different set of challenges. But it's there that it's an option. If you remember, Lucy, I started drawing you pictures, I think, at this point.
Yeah, that's why Vicky, can I ask that you work with Sakina and we do a blog on this one, because it is so complicated, and perhaps bring Victoria in as well on this.
Yeah, that'd be great.
It might sound sensible to those that are in the know, but to us that are a little less experienced, it's confusing. So we'll bring that back to you on a membership being used, everyone.
Great. We did only have one more question come in, so if everyone's okay, I might just ask it if that's all right. Again, probably for you, Sakina. Sorry about this.
It's all right.
So someone's asked, where do we stand if we're driving the employee to and from work, and then picking them up, and they have to wait for us to take them home?
That's quite a specific scenario question, which would probably have many different layers. If you are requiring them to be there, then they should be paid for that time, but it's very difficult to answer that sort of question because there are so many different nuances. There's so much different information that would need to be gathered around that. If it's a requirement that you are putting on your employee, sorry, your worker, you would absolutely 100% need to pay them for that time.
Okay.
Mm-hmm.
What do you
Sorry.
think, Claire? See, you've got a thinking expression going on there. You're not sure.
I'm just going to sink.
Right. Okay. Okay. Well, I think we'll wrap things up there. Thank you so much for everyone coming. Thank you to Zakina, Simon, all our other guests and speakers today, and everyone that contributed. What we'll do is we've recorded today's session, so we'll send the link round to everybody so that you can watch it back if you'd like to, and we'll compile a document of questions and answers and send that round to everyone as well, so that you've got that to refer back to. And thank you so much for coming. I hope you've all found it useful.